It's all about China because so many companies have so much riding on Chinese growth, and that growth continuing. I am here with Stephen Guilfoyle from Meridian Equity Partners, so we have a lot of China data coming out tonight, right?
Well, that's for sure. We have a quiet week here so far, but tonight you got Chinese GDP for the second quarter, which we're looking for 7.6%. You got industrial production, which we're looking for an increase of 9.9%, and you have retail sales, which we're looking for an increase of 13.5%. Now, these all seem like gaudy numbers to most people, but for China, these are deteriorating numbers. So China's trying to avoid a hard landing. If these numbers coming around those levels or even a little worse, I think it's very likely you see the PBOC act on that, possibly cutting the reserve ratio requirement. I think it's very likely you see Premier Wen Jiabao push for fiscal reform, maybe cutting taxes. So it's very likely that after today, maybe tomorrow, maybe a little later, you'll see the PBOC act to promote growth.
We've also got JP Morgan reporting their earnings tomorrow. We could get a 1-2 punch, if we see, bad data out of China and then JP Morgan comes through with, these big London whale losses, it could bode badly for the market tomorrow.
Certainly. You have JP Morgan, you have Wells Fargo as well, and next week you got a couple of other big financials like Citigroup and I think Bank of America. So as we go into the next few days, the financial sector becomes a big deal. And while things such as the LIBOR scandal aren't being spoken about and won't be in those earnings reports, they will certainly probably be asked some tough questions during the conference calls that come with those earnings reports. So I think at the very least, the financial sector will entertain you next week, and at the most, you might get something out of it.
All right, and today we did get some jobless claims out. The number was not so bad. However, there were some underpinnings within that number, and that's why this market took a hit today, right?
Well, that's true. You saw a nice drop in the jobless claims, dropped about 26,000 individuals. But when you look a little closer, you see that the auto industry is a little low on inventory, and they're closing their plants for the summer a week or two later this year than they usually do. So the expected pop, the positive or negative, how you look at it, pop, the increase in jobless claims that usually comes with that will probably come in a week or two. So this was a little deceptive, not on purpose, no one's trying to lie to you, but that will come, that pop that you'll see in a week or two.
All right, so something wonderful to look forward to, but we are going to be watching those Chinese numbers tonight and see what that's going to do to us tomorrow.
This market is
stock tickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to